Howdy, y'all. Happy Wednesday. Welcome to Liberty Call. Today is Wednesday, November 15th, 2023. Hope everybody's having a fantastical day out there in the interwebs. It's a pretty nice day here in Colorado. Looks like the skies have cleared off, blue skies, and it's not too cold right now. So me and my boy Jake are going to go out and play as soon as we finish up this broadcast. So yay! Anyways, if it is your first time watching Liberty Call, if you could do me a favor, yes, you. If you could hit the subscribe button, the like button, give me some thumbs up, and hit that notification bell. You want to know when I go live. All right, let's go ahead and get into the numbers for today. Dow Jones was up 0.47%, 163 points, closed at 34,991. S&P 500 was up 0.21%, closed at 4505. NASDAQ pretty flat today, up 0.07, closed at 14,103. The VIX down 0.07, it's at 1415. Canada was up 0.17, Brazil was up 2.29%, and Mexico up 0.56. Our friends over in Western Europe, Germany was up 0.86, the UK up 0.62, France up 0.37, the Netherlands was up 0.62, Spain up 0.18, Italy up 0.42, Switzerland down 0.07, and Portugal down 0.62. Russian exchanges both green today, MOEX up 0.08, RTSI up 1.55, and the overnights in Asia, the Nikkei was up 2.51. Australia up 1.42, New Zealand up 1.78. In China, the Shanghai was up 0.55, the Shenzhen Component up 0.72, China A50 up 0.77, DJ Shanghai up 0.54, Hang Seng up 3.71, and the Taiwan weighted was not open today. All right, so lots of happy markets today. I guess some carryover from yesterday's news and the inflation data that continues to come out, looks pretty good, assuming you think that, lower inflation numbers are going to turn into lower interest rates, which, the only way I see interest rates really going down is if the economy goes into the crapper. That's probably the only way Powell is going to make an adjustment there. But, I could be off. All right, let's get to the market recap. U.S. stocks rise on further signs of easing inflation. Target leads retailers higher. All right, U.S. stocks experienced a mixed session as technology stocks took a breather, but overall market sentiment remained positive. Inflation data showed further signs of cooling, with producer prices slowing to a pace of 1.3% in the 12 months through October. This follows a deeper than expected slowdown in consumer inflation for October, supporting optimism that the deflation trend is set to continue. I haven't seen any deflation. We've seen inflation slow down and stop. We haven't seen prices go back down, down, down. So let's slow down on that. The ongoing cycle in inflation is reinforcing expectations that the Federal Reserve's rate hiking cycle is over, potentially opening the door for rate cuts in the first half of next year. See, they're just, I want some cheap credit. All right. Retailers gained some traction, with Target leading the way after beating profit expectations, even as same-store sales fell 4.9%. The retail giant's positive guidance for the fourth quarter contributed to an 18% rise in its shares. The retail sector as a whole rose over 2%, with VFC also contributing to the gains following an upgrade from JP Morgan. However, discount retailer TJX Companies, Inc. Bucked the trend, declining over 3% despite reporting Q3 results that beat expectations. Tech stocks took a breather after a recent rally, with Meta Platforms, Inc. showing weakness. On the other hand, Microsoft Corporation was marginally higher after launching its own chip, Maya 100, for artificial intelligence, positioning itself as a competitor to NVIDIA. NVIDIA Corporation, which had a record high close the previous day, fell 2%, potentially ending its 10-day winning streak. Energy stocks faced headwinds as oil prices slipped following higher than expected increase in U.S. crude stockpiles, as reported in the weekly inventory data. Halliburton Company, Diamondback Energy, and Schlumberger were among the notable decliners in the energy sector today. All right. So again, positive news. Inflation is slowing down. Let's slow down on the word deflation, because until we get back to 2019 prices, which I don't think we ever will, I just don't see that. I just don't see that being the proper term to use. All right, let's dive a little deeper into the inflation numbers. U.S. economy cools as retail sales dip, monthly producer prices decline. U.S. retail sales declined in October for the first time in 7 months, dropping by 0.1%. This decrease was less than the anticipated 0.3%, and the figures for September were revised higher to show a 0.9% increase instead of the initially reported 0.7%. The decline in October was attributed to decreasing spending on motor vehicles and hobbies. This, coupled with the largest drop in producer prices in 3.5 years, suggests slowing demand at the beginning of the fourth quarter, reinforcing expectations that the Federal Reserve will cease its rate hikes. The reports, along with the cooling labor market, have led economists to believe that the Fed's current rate hiking cycle is over, although there is no sign of an impending recession. Really? The data revealed a mixed picture of retail sales, with motor vehicles and parts dealers experiencing a 1.1% decline. Furniture store sales dropped by 2%, and there was a 1.7% decline in sales at miscellaneous retailers. However, online sales rose by 0.2%, and sales at food services and drinking places increased by 0.3%. Despite the dip in retail sales, there's no indication yet that the recent resumption of student loan repayments negatively impacted spending. Target's positive forecast for holiday quarter profit, largely above expectations, contributed to a rally in stocks on Wall Street. The dollar rose against a basket of currencies, and the U.S. Treasury prices fell. Financial markets are now anticipating a rate cut in May, according to the CME Group's FedWatch tool. Since May of 22, the Fed has raised its benchmark rate by 525 basis points. That's 5.25 for normal people. Excluding certain categories, core retail sales, which align closely with GDP's consumer spending component, rose 0.2% in October, and core retail sales are expected to support fourth quarter GDP growth. All right, so some things are coming down in price, slowing down in price gains. All right, so last up, got some good news. Your Thanksgiving meal is going to cost you less. I mean, it's still costing you more than it did 3 years ago, but it's going to cost you less than it did last year. So we got some positive news here. All right. According to the American Farm Bureau Federation's annual survey reveals that the cost of a traditional Thanksgiving meal for a party of 10 will be approximately 4.5% less than in 2023 than in 2022. The survey, which prices 11 ingredients, including turkey stuffing, sweet potatoes, rolls, peas, cranberry sauce, and pumpkin pie, showed that 7 of the 11 items experienced price declines. The centerpiece, a 16-pound turkey, saw a 5.6% decrease, costing only $27.35 compared to the previous year. While the Farm Bureau economist Betty Resnick noted that consumers would experience relief in Thanksgiving food prices, the total bill for the meal at $61.17 remains around 25% higher than in 2019, pre-COVID-19. This data reflects the broader inflationary impact of the pandemic, where the price level is shifted higher, although at a slower pace. The Farm Bureau's Thanksgiving meal prices stayed within a narrow range from 2011 to 2019. However, disruptions caused by the pandemic led to price spikes in 21 and 22 due to supply chain issues and an avian disease outbreak. Looking ahead, the pace of change is expected to be slower, with supply problems resolved and recent producer price data indicating modest food inflation. Factors contributing to lower prices for some items include expanded supply and increased imports. However, certain processed items like canned pumpkin mix and dinner rolls saw price hikes, potentially influenced by sustained wage increases in a tight labor market. Bake your own rolls. It's not that hard. I've started baking my own breads and stuff. It is super simple. You screw it up the first couple times, but hey, practice a few times. I've been making pizza for the last few months. It's almost as good as the stuff you get at fancy restaurants. Anyways, off my soapbox. The Thanksgiving holiday traditionally marks the beginning of the Christmas shopping season. Retailers may engage in aggressive discounting amid potential declines in consumer demand and economic growth. Overall, recent economic indicators suggest a moderate inflationary environment. Consumers may find additional savings on turkey prices in the days leading up to Thanksgiving, according to the Farm Bureau. All right, so according to the Farm Bureau, we're saving bunches of money. Granted, it's still 25% higher than 3 years ago or 4 years ago, but, we'll take some small wins where we can get them. And now me and my boy Jake. Hey, Jake, you want to go play some ball? Ball? Nah, he's staring at the door. Anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful evening, and I shall talk to you next time. Adios.